Well, hi everyone. Welcome to the Buffett and Beyond Stock Analysis Video Podcast with your host, Dr. Joseph Belmonte and Debbie with the Y. And these methodologies are based on the book Buffett and Beyond, second edition by Dr. Joseph Belmonte and published by Wiley Publishing. And remember, folks, if you want to live on the beach like Jimmy Buffett, you've got to learn how to invest like Warren Buffett. The good.
Stocks that should be in our portfolio.
The bad.
Stocks that should be in somebody else's portfolio.
And the ugly.
Oh, stocks that should be in nobody's portfolio.
Okay, let's get on with some stocks. You'll see exactly how this method works and how we here at Buffett and Beyond set the investing parameters so that you, all of you, can outperform most of the professional money managers out there in investment land. And this week we're going over the medical supplies industry with one non-invasive stock and one invasive stock. And Illumina and Intuitive Surgical are our two favorites going forward in the medical supplies industry. Debbie, let's get right to the first stock.
Alrighty, that would be Illumina Incorporated. Their stock symbol is ILMN. As stated, they are a non-invasive and they develop next-generation tools for large-scale analysis of genetic variations and function for improving drugs and therapies, customizing diagnosis and treatments, and curing disease. Products include its proprietary bead array technology, which uses fiber optics to achieve large-scale testing, and its oligator technology, which synthesizes, and I'm going to let somebody else say this for me, large quantities of
oligonucleotide.
Right. Straight from Google, folks.
Straight from Google. That would be oligonucleotides and short stretches of nucleotides used in genetic analysis, and they have about 7,300 employees.
And to get a job there, you all have to learn how to pronounce
say oligonucleotides.
And the first thing we want to look at is that clean surplus return on equity. And folks, remember, clean surplus return on equity is totally different than the traditional accounting return on equity. And I always want you to think of your bank account when you look at the clean surplus return on equity, because the average stock in the S&P 500 has a clean surplus return on equity of about 13.5%. And we want stocks in our portfolio that have a clean surplus return on equity above the market average. So think of your bank account, because this ROE is very much correlated with total returns going into the future. As my doctoral dissertation pointed out, and the two editions of my book point out very, very well. So think about bank account S&P 500 paying you 13.5% interest, and bank account Illumina paying you 21.8% interest. So we look at the clean surplus return on equity. It's also above our threshold of 20% to get into our growth portfolio. And net income growth, folks, is way above the averages, which we'll see toward the end of this video. We'll see the market averages and how Illumina and their net income growth and revenue growth far surpass the market averages. So this stock is looking very, very good. And we don't have to look much further with a clean surplus return on equity above 20%, about 80% more than the average stock in the S&P 500. Net income growth about 50-60% above the average, and revenue growth twice as much as the average stock in the S&P 500. When we look at the 1 year return, and if you are viewing this, the black line is the S&P 500, up about 7% for the past 1 year, with Illumina up 30% for the past year. So folks, this stock has done very, very well the past year. And over 5 years, with the market up about 50%, this stock is up more than double that at about 110% return for the past 5 years. So double the market averages over the past 5 years. And okay, Debbie, let's get to our second stock, Intuitive Surgical.
All right, that would be stock symbol ISRG, and they are the invasive designs, manufacturers, and markets. They also market the Da Vinci surgical system and the Eon endoluminal system. I can get through this. The company's products and related accessories enable physicians to improve the quality of minimally invasive care. The Da Vinci system consists of a surgeon's console, a patient side chart, and a high-performance vision screen. The ION system is a flexible robotic-assisted catheter-based platform for lung biopsies. They have 5,527 employees.
And now, have you noticed that all these companies have big words that none of us can pronounce? But boy, if you can learn how to say them, it's so great at cocktail parties. You just impress everybody.
Yeah, but you got to know what they are, too.
Maybe. And looking at the numbers on Intuitive Surgical, we see that it is well above the market averages with a projected 17.9% for 2020 and a projected 18.7% for the rest of this year, 2019. So this stock, although not above 20%, but it has been in our growth portfolio for a long time, and we are sticking with the winner here. And as we'll look at the net income growth and the revenue growth in one of our last slides, we can see that this stock is way above average. And folks, look over here at debt. And remember, the years to pay debt, Buffett's rule of thumb is that if you take all the earnings a company is making and use it to pay off debt, how many years would it take to pay off debt? His rule of thumb is 5. Ours is about 3. And years to pay debt here is 0 because Intuitive Surgical has no debt. And when we look at the past 1 year, folks, we can see this stock has done exactly what the market has done, and that is about 7% return. The market's up about 7%. Intuitive Surgical is up 7% for the year. And when we look at the past 5 years, well, now we can see why this stock is taking a break this past year, because with the market up about 50%, this stock is up almost 300% over the past 5 years. Let me repeat that. The market up about 50% over the past 5 years. Intuitive Surgical up almost 300% over the past 5 years. Now we can look at these stocks compared to the market averages. And as I mentioned before, the market average for the clean surplus return on equity is about 13.5%. And I'm talking about both the Dow and the S&P 500. Intuitive Surgical, 17.9%. Illumina, 21.8%. So you can see the ROEs are very, very high with these two stocks relative to the market averages. And folks, that's what we want in our portfolio. We're trying to outperform the market averages because over any 10-year period, 96% of professional money managers cannot outperform the market averages. And I'm talking about the folks who run the mutual funds out there. So very, very few professional money managers that run the stock exchange listed mutual funds can outperform the market. So we want to do that, and we have done it very nicely over the past 18 years now. So folks, we want to fill our portfolios with stocks that have clean surplus ROEs above the average stock, because there is a big correlation, like 80% correlation of the future returns of a stock based on the clean surplus return on equity. So we want stocks that have a clean surplus return on equity above 13.5%. Now, the net income growth over the past 5 years for the market averages is 11.6%, Intuitive Surgical 19.6%, Illumina 20%. So these companies are both almost double the net income growth, the past 5-year net income growth, almost double with these two stocks. And the revenue growth for the average stock for the past 5 years has been 6.3%. And for Intuitive Surgical and Illumina, right around 15% for both those stocks. So you can see that both these stocks are double the revenue growth. So folks, what is there not to like about these stocks? Now, the only thing that we're concerned with is that Intuitive Surgical has an ROE that is slightly declining, which means that the rate of increase of the growth in earnings is slowing down. And that's the only thing that we have. But with the 17.9% return on equity versus the average stock of 13.5%, Intuitive Surgical is doing very, very well. And neither of these stocks have a dividend. That means all the money these companies are making is being put back into the company in order to grow even more. So folks, we like these two stocks. And over 5 years, folks, with the market up about 50%, Illumina up over 100%, doubling the market, and Intuitive Surgical up almost 300%. That's 6 times more than the market over the past 5 years, folks. Both these stocks are in our growth portfolio. We expect them to be there next year too, depending on the numbers, but the numbers are looking very, very good. So hopefully these two stocks will be in our portfolios for a long time to come. They've done very well for us.
Well, JB, I think we've just about covered all the questions sent in by our listeners out there in investment land. And remember, folks, we're here to answer your questions not only about individual stocks, but also about the stock market in general. So keep those questions coming, and who knows, we may even answer a question or two you didn't even know you had. And that's about it for today, JB.
Okay, folks, don't forget, if you want to receive a full free month of all our letters and complete access to our computer program, just go to our site, BuffettandBeyond.com, and sign up. Remember, all you need to manage your own portfolio, and it's free. Hey, just go to BuffettandBeyond.com, and remember, Buffett is spelled with 2 F's and 2 T's. That's BuffettandBeyond.com. Okay, folks, we had a great day today.
And tomorrow will be even better.
All right, bye, folks. We'll see you next time.
Bye, everyone.
And remember, folks, if you want to live on the beach like Jimmy Buffett, you've got to learn how to invest like Warren Buffett. We've had a good week, folks, and here's hoping that next week will be even better. You have a safe weekend, and we will see you next time.